Traders, SageFT from the Live Trading Desk. How is everyone this fine Sunday evening? Let's go ahead and take a look at the news that shaped the landscape of last week. Nothing on Monday. Okay, retail sales on Tuesday, but the bomb was dropped, which everyone knew it was going to be moved some, but not as much as it actually did. The FOMC announcement at 2 p.m. and they lowered it 0.5%. Now, what we're going to do is we're going to keep my opinion out of this, and I'm just going to look at the charts. So now, the first thing that we want to point out is on the daily chart, as we came into Monday, here's Monday's bar, and we had this high to high. I know it's hard to see, but what we have here is this high to high from this point to this point, and we were watching it on Monday. What happens if we get through it? Do we come back into blank, 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 blank? Okay, well, great questions. So if we go down to the 4-hour chart, here's what we were looking at as we come into Monday. So we're kind of flat coming into it. We got the high to high right above us here. You can see it here. And so what we're wondering is, okay, are we going to come up into resistance and are we going to test it and then move back lower, right? But let's set the landscape, shall we? Let's go to the daily chart. Let's look at the KISS chart on the daily chart. Here's the 200 simple, which is green. Here's the 20 period simple moving average, which is above. And at this time, it was perfectly flat, right? You'll see it right here. You can get this indicator right off of TradingView. It is called SageFT's KISS chart. All right. And so what we're going to notice is everything is pointing upwards and it looks like we're about to make a big run. If you look at the slope of the 8 EMA, it is starting to push and it's lining and it's meeting with the 20 period that was flat on the daily chart. Now, if we go into the 4-hour chart, we can see that as we started the week, right about here, we were in pure position one to the upside. We're looking for pullbacks to go long. All right. So now let's fast forward to the FOMC because really that's all that was happening. That's what we were waiting for. Everything needed to be addressed and here it comes. Let's go down to the 15-minute and we can see how crazy it was. And then what we're going to do is we're going to go back to the 4-hour and figure out what were we going to do with it. All right. So what we have here is a beautiful diamond. If you just draw it, there's a diamond, right? I guess I could do it. I normally do this on NinjaTrader, but let me go ahead and do it anyway here so you can see how a diamond is actually drawn. Okay. It's kind of an oblong diamond, but it's there. Okay, so then you have your diamond. Kind of looks really weird, but you see what I mean. All right, and so then if we back out to the 4-hour chart, let this all complete on the 15-minute. Let's go to the 4-hour chart. Let's see what comes to mind here. Well, what we have is a sword and shield is what we call it, but it's actually called an inverted hammer or a 3-bar play. Let me bring in the analog. Here's the analog. This is an inverted hammer or 3-bar play. You want the wick to remove most of what was in front of it. What we're going to do is we're going to enter here with our stop below and we're going to ride it, right? So here's how this worked. This was one of my largest trades I had ever called in real time. In the Discord, I said I'm long here with very little leverage on this sword. This completes and I go long here. I go to bed and I wake up and I get 65 points in my favor. Close the trade immediately and then we're on to the next. But what was the next? We see that the market is just going to continue to climb. After it breaks this with a closing bar, let's take a look right here. In the middle of the night, you could have literally just went long. Literally just hit the market button and just rode it. Have your stop right below here, and you could have rode it all the way up, right? But most of us don't trade in the middle of the night. Now, what I want to point out is there were some things that were violated that the sellers did not ever want to see violated again. The first one was this high to high trend line from here to here. Gone. Second thing, this inefficiency in the market. Inefficiency. Okay, where it just swoops right through it and they can't get back to it. And so this level in between here, most often known as a fair value gap. This was the determining factor here, 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 and here. Is it going to be the determining factor again? Here, here, and then finally it closes above it. Now watch this. This is how important this is. Look what it does. It comes down and touches it again and then rallies, right? So now that fast forwards us or brings us back to how did we trade it? Perfect. On the 15-minute chart, we were in position one to the upside since 10 p.m. on the 18th of September, right? So here, chop sideways, trade the outer edges of it on the smaller time frames. Okay, and we're all just waiting for the market to give us the big news spike whatever it was going to do. Now that we have it, our levels of support hold, reclaim, run. We go back above the 200 simple on the 15-minute chart. We go back into position 1 on the 15-minute chart. So therefore, all we did was we waited for the pullbacks and we traded to the long side for the most part. We waited for our opportunities to come to us. Right? And then once we got above the all-time highs, which was 57.82.50 in the December contract, because remember, this was also quadruple witching rollover. This is one of the most violent times that you could trade. Once every 3 months is quadruple witching, but then ever so often they throw a Fed announcement bombshell in the quadruple witching. Therefore, we have to be prepared for it, and it is business as usual. As you can see, going to position 1, we just take the pullbacks and the longs. Now, we get a big red bar here. We wait for it to come back into position 1, and we start to execute again, and again. As we get over the 82.50s, we recognized there will be buy-side liquidity. What that means, this is very important because this is the all-time high touch. Now that we've touched it, okay, next week or whatever, we can go through it. But the way that the buy-side liquidity works is there is a lot of anticipatory action that moves above the all-time high. What I mean by that is retail traders are going to put their buy stops there, whether they're short and it buy stops them out of the market, or they want to get long and it buy stops them into the market. So therefore, the anticipatory, predatory buy-side liquidity kicks in and gladly accepts those trades into their offer. Now, I'm going to speak very normally again. Okay, this is the offer. This is someone offering out, and I'm going to use 57.83. That would be 2 ticks above the all-time high. So somebody sees it go through the all-time high, so they hit the market button, which triggers an order to buy the offer. But because the whole world can see that that is the all-time high and it's never traded there, everybody knows that that's where losing traders are going to get stuck if it can turn around. So how would they do that? Well, if players, big players, have large positions and they want to get the correct price, how do they do it? Good. They put their offers above prior supply areas, because what they can do is they can have large size that gets hidden in all of the madness of the market orders that try to push the instrument through the prior all-time high. What I mean by that is buy stop, right? So then the guy that's the buy stop, if there was no liquidity, buy side liquidity above the market, somebody hit buy stop, it would go zoom, zoom, zoom. And it would be so high that nobody could afford it. So what happens is the buy side liquidity comes in and they have to suppress the demand from the weak players. Everybody knows you don't buy stop an all-time high. Here's what we also know. You never short an all-time high. Well, if you don't buy stop it, how come you don't short it? Because the day that you short it is the day that you will never trade again. It will eat your lunch. That one time you try to sell to open, right? Selling at an all-time high is completely different than selling to open. There's sell to close and sell to open. Sell to close, that means you're taking profit up here, or you're exiting the trade up here. It doesn't mean you're taking profit. Sell to open means you're actually betting on it not going through, and you're betting on it going back down. That is a fool's errand. That is where accounts go to die. All right, so now that we've got the lay of the land, what are we going to do next week? Well, let's zoom out. Here's the 15-minute. What I see is this right here. This is very important. Let's back up because this is going to put it in context. This is what we're going to plan on next week or starting next week, right? We don't know which direction it's going to go. What we can say is, based upon statistical relevance, the odds of it moving upwards are greater than it moving downwards, right? We have the 200, the 20, and price, all in the hierarchical fashion, which says we could move higher. Okay, let's go to the 4-hour. We've got the 200, we've got the 20, and then we have price above the 20 in the upward direction. Therefore, bullish, right? So now on the 15-minute chart, here's where this all comes together. And this is what we're looking for next week, and then we'll get out of here. What we're looking for is, this is narrow state. What we want to do is we want this narrow state to continue as long as absolutely possible. Once the narrow state breaks, this is where we actually want to trade. We want to trade here. Not here, not here, definitely not here. It's going to come in and reset again. We want it to be in the perfect narrow state. It's going to ping pong along. This is the most agreed upon price level. Now, if this is the most agreed upon price level, why do we want to trade where everybody agrees it's the same price? You don't. So what we want to do is we want to trade here, okay? If you think it's going to go short, here's the x-axis, okay, time. Flip it on the x-axis, on the time axis, and that's a short. So then it would just be the mirror image of this on the x-axis. If you're going to short, you're going to want to short this level here. If you're going to want to go long, you're going to want to go long this level here. So that's what we're waiting for. Now, so which way could it move? Well, very simply put, it could move up. If it doesn't, we're ready for it. If it does, we're ready for it. But in this narrow state, this is exactly what we want. We want it to move away from the narrow state, right? As our guy Velez says, right? So our job next week is to identify when it remains in this narrow state or when it moves away from it. And that's what we're going to do. Okay, once again, everybody, this is SageFT from the live trading desk, Monday through Friday, 8 a.m. to noon on YouTube. Don't forget to smash that like and subscribe button. Turn that notifications bell on so you know when we start streaming or when we provide content. See ya.